Aloha, everyone. I hope you had an excellent Thanksgiving holiday. Overall, very long weekend. Leading into this weekend, it's about as good as it gets on my end. As each session went by this past week, less and less capital was raised via stops being hit, and it all culminates to the long positions this weekend. I can't even put I don't even have 1.5% total capital available to put in these three high quality long positions. So you can use the recommended asset allocation that I have per long position: 1% for Yang, 1.5% for F&D, 0.75% for IOTS. Or you can increase it, do whatever you feel comfortable in. With high quality signals, which I wouldn't put any of these in that quote, quote, super high quality level. 10 stocks, 10% of your capital each to keep commission costs down, but you can go anywhere from 20 stocks, 5% each, 50 stocks, 2% each, whatever you feel comfortable at. Just make sure your commission cost to capital is under control. So the new long positions, there was no new long position. Technically, there was just one new hedge position. YANG. There's been a lot of volume following this move to its new 52-week low right here. Heavy volume on the gap down day, heavy volume on the day where it kind of flatlines. Now we have a candle over candle price bar on strong volume. My RSI and MACD indicators are coiling, indicating a bounce. Now this one, it could lead to like a bounce here that lasts up to here. I mean, that's the goal. The goal is to get good move so we can book some profits when the RSI gets overbought. But the main thing is that you can see every time it gets oversold, it does bounce. And I'm so heavily long now, and some of my VIX hedges are hitting and triggering stops. Along with my Russell 2000 hedges, MIDS and SRTY, those two hedges hit the past week as the Russell 2000 moved into new high ground. So anytime a hedge triggers, I'm going to take it. YANG did that in my ETF scan, so 1% of my account capital, which I don't have. Limit order 571, your one and only cut loss level 554 if it moves below 555. Now with me, moves below 555, if I get 100 shares, 50 will be sold off, whatever the then new 52-week low is on an intraday basis. That then becomes my final sell stop on the remaining shares. Now the long positions, add signals in FND. Let me go ahead and remove this arrow on this chart really quick. There we go. So FND, this is an add signal. It sliced through my first sell stop on Wednesday because we were closed on Thursday. So I went long that morning. The signal came on Tuesday. Wednesday morning, I'm filled, and intraday Wednesday, first half is hit. Today's intraday reversal with a nice bullish hammer candle pattern. Even though volume isn't high, the stock still has max green bop. It's a CanSlim quality stock. It's in my IPO scan, and it's in my max green bop for the past 5-day scan. So that's a bullish reversal. It's technically a buyback and an add signal. So for me, it'll be treated as just an add buyback signal with whatever capital I can get, which, like I said, is not going to be much whatsoever at all. Like it's going to be less than 0.5% a piece. So it'll be under $2,000 per trade that I'm taking here. So I'm really, I guess investing with just fumes. Really, I'm just on the fumes if it's a tank of gas reference. But FND 38.54 limit order, the high of the day. First cut loss, Friday's low of day. A move below 37.51, 37.50. Final cut loss, the final stop that still remains from the initial long position, 36.24, 1 cent below 36.25. FND, like I said, CanSlim quality, IPO stock, so those are always get preferences because IPOs can really move when they start moving, and also max green bop for 5-day scan. So 3% total, add signal 1.5%. Then the last add signal, IOTS. Lower price, perfect speculator scan, quality name. It's also a semi CanSlim quality name. I'll give it like a half CanSlim rating. And it was also in my max green bop for the past 5-day scan too. So IOTS and FND have the CanSlim and max green bop for 5 days. Similarity between the two. With IOTS, the little issue is I really like this chart pattern. However, Intraday on the 20th, when it was near its highs, this would have been an epic ad signal had it closed near 8, but it closed more near the lows, so I passed on this. But if it would have closed near 8, this would have been a perfect ad signal right off the 50-day moving average with a beautiful, not a beautiful, but a very nice longer term chart pattern. This red bop prevents it from being beautiful, and it losing the green bop during here also does that, but a very nice chart pattern off those lows to the highs here. But like I said, didn't close near the highs, so it wasn't a long position there. The next day had that potential to be an ad signal again, but once again did more work in the lower end of the range by closing down there, so it prevented from being a long signal. The very next session on Wednesday, same situation, close off the highs, preventing to be a long signal, and I felt like now we're extended from all the moving averages, so it's a little much. But then come Friday, the longer terms to the January lows chart pattern looks like this, even out further, showing you from the November lows. You know, you got a pretty tight pattern. Like I said, it was in the max green bop for the past 5 days. It's semi-canceling quality, and it's a low price perfect speculator scan. So even though it's a little extended, since I can't put a whole lot of my capital into it anyway, it's an ad signal. So IOTS would normally be 3% if it was new, but it's extended, so it's 1.5%. And then since it's an ad signal, it's halved again, so it's 0.75%. So 3 for new, not new, add 1.5 extended, 0.75%. So I'm going to add to my IOTS position, limit order 845. First cut loss, move below 750, 745. This is one of those 5-cent stocks. Final cut loss, a move below 705, right? Yep, 705. So if it hits 7, I'll be completely out of IOTS. All right, everyone. Enjoy the rest of your long overall weekend. I'll see you in the chat room Monday morning during the pre-market. Aloha.